Hi there. Doge is down by about 2% this week. And however, it's stabilizing above the red key level of 0.0964. It looks like it's setting a near-term bottom, setting stage for going to the sign of strength stage. Let's dive into the chart and see whether there are any kinds of whales move going on. If you're new to my session, I'll cover the Wyckoff stage, potential trend change, as well as key price levels. These are education content only, not financial advice. If you look at the chart here, for 3 weeks, the price has been able to close above the red key level of 0.0964. Not only that, for this week, it actually has been able to get a little bit higher. Okay, you see the wick from the bottom, clear sign of bulls getting in, pushing the price up. However, the volume has dropped to just half of last week. Okay, but last week is basically bulls and bears. Very strong testing. Whether they're going to test the purple key level of 0.857 or the orange key level of 0.1112, which the orange key level is the current resistance if the price really tried to go up to the sign of strength. Okay, that's what we need to see, and probably the bulls are building the case already. A sign of strength requires price rise to challenge the range between the 0.194 light blue key level and the blue key level of 0.162. Reason being that's the top set by the automatic rally stage in January. Okay, not only that, we need to see higher than average volume supporting that kind of price surge to indicate that people are starting to come back, because sign of strength isn't part of like a straight line towards the distribution peak. A lot of times you see price retracement after setting the sign of strength just to check out the last bit of paper hands before the whales let the price go up. Okay, you see this stabilizing, setting the stage towards the sign of strength. You see low volume, then comes high volume. Not only that location, you see low volume stabilizing, high consecutive volume, high price comes in, re-challenging the previous trading range top. Okay, so that's what we are potentially going to see. Daily chart, we talked about multiple days. The 18th, the window has been missed. The bulls tried with pretty good volume, but the first 2 days was pretty arguable because the price spread was very slow. It's basically selling and buying combined. Only the third day that the price went to challenge on the 14th, the orange key level as well as the ceiling of the downtrend. The bulls were successful on that day. The next day, they tried again, but get hammered by the bears. Fortunately, they have pretty good support above the 0.964 red key level. You see, volume came in. Yesterday was pretty indicative, actually. There was quite a bit of change of hands again. Potentially, a bunch of people were trying to sell, seeing the price continuing coming down. However, there were somebody absorbing as well. So that's why we see a small candlestick body, but a high volume. So that may be another sign, not what happened last week. Will we see a price stretch again, re-challenging the ceiling of the downtrend and break out and challenge the orange key level of 0.112? It may be a likely scenario. The risk is that there are economic data coming out in March. Okay, even on 27th of February, there's PPI month over month. So those numbers are going to impact whether it's going to be a rejection by the ceiling or is it going to be a breakout. When it breaks out, we want to see the price staying above the red key level for a couple of days instead of dropping back to the channel in a day or two like what it did last week. All right, that's a fake. We want something solid. So beginning of March is the next window. When the price goes further down in the next 10 days, we'll get an answer. Okay, if it gets rejected, then the fallback is 12th of March. If you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.